Completed. Hi guys, welcome back. So this is the most important section, the insurance claims, a definite question in the examination. So those who are waiting, so we can see some more students may join. You will get the notes from Shikara website. So go to the Shikara website www.shikaratutorials.in. In that we are having the free resources. Go to the free resources, the notebooks, the materials and video lectures. All the things will be available there. You can find out there itself. Sirisha, good. Hi Amma. Smart classes. Hello, good evening. Okay guys, so without any late, we can start the class. So the insurance claims, total weightage 7 mark plus 2 marks, 7 mark definite question plus 2 marks. Totally we are going to get 9 marks. So first of all, before going to start the insurance claims, we need to understand about the meaning of insurance. So generally in the insurance, we are having the two parties. First person is called as insured and second person is called as insurer. Okay, now the person who will make the insurance is called as a insured. Okay, nama. The person who will compensate the loss is called as a insurer. Okay, now for example, we have to think from the company point of view. We know already. For example, the company has taken an insurance premium from the insurance company. You can take a life insurance or any insurance. So here the company will become a insured and the insurance company will become as insurer. The person who will compensate the loss is called as insurer. Okay, now the person who will suffer the loss is called as insured. So what is the meaning of insurance, sir? It is an agreement between the two parties, insurer and the insured, whereby the insurer agree to compensate the loss suffered by the insured. So who will agree to compensate ma? Insurer will agree to compensate the loss suffered by the insured. In return, the consideration is called as premium. So in return, the insured person need to pay the premium and the insurer will compensate the loss. So these are the two meanings. This is the meaning of insurance. So generally, when coming to the types of insurance, we are having the two types of insurance. First one is called as life insurance and second one is called as general insurance. So in the general insurance, we are having the three types of insurance: fire insurance, marine insurance and other insurance. So in this chapter, the life insurance will not be covered. Only when coming to the general insurance, only fire insurance will be covered in this chapter. The marine insurance and other insurance are not covered in this chapter. So next one, when coming to the assets of the insurance, we are having the two assets. First one is called as accounting of insurance. So how to make the accounting treatment of and how to prepare the financial statements of the insurance company. So overall we are going to discuss in a paper number 10, corporate accounting. Now in this paper number 6, we are going to see only the calculation of claim. So we are having the two types of calculation of claims. First one is called as loss of stock and second one is called as loss of profit. So first we are going to discuss about the stock and then we are going to discuss about the profit. So note point. So in this chapter, we have to think from whose point of view, ma? We have to think from the insured point of view, nothing but business organization. So which will take in the fire insurance. So we have to calculate the loss. So the person who suffered the loss, that person have to calculate the loss and that person have to say this much amount of loss we have incurred. And what the insurer will do, amma? The insurer will recheck the calculation and he will provide the claim amount. So this is the process. So remember, you have to think from the insured perspective, nothing but business organization. So first we are going to discuss about the loss of stock. Sir, what is the meaning of loss of stock? We are having one doubt. Loss of stock means the goods which are available as on the date of fire, that particular amount of goods we need to find out. Nothing but closing stock as on the date of fire we need to find out. So in order to identify the stock available as on the date of fire, so what is the meaning of that one, ma? Closing stock as on the date of fire we need to find out. So the closing stock will be available on which account, amma? Trading account or P&L account? Trading account. The closing stock will be available on trading account. So Generally, in order to find out the closing stock, what we all needed, Amma, we need a opening stock, we need a purchases, we need a direct expenses, gross profit and sales. So, how we can find out the opening stock? So, in the practical world, I am saying. So, in the question, they will give the opening stock, they will give the purchases, they will give the direct expenses, sales, and we can easily calculate the gross profit percentage. So, we know how to calculate the gross profit percentage, gross profit divided by sales into 100. But as per practical approach, I am saying, how to find out the opening stock, when the fire accident is occurred in our business, our books of accounts also will be lost. Okay, now how we can find out the opening stock? In general, we can find out by way of seeing the previous financial statements. And where we can get the previous year financial statements, in company website we can get the previous year's financial statements, and as well as MCA portal. What is the meaning of MCA portal, Ministry of Corporate Affairs also will get the our financial statements, because we need to upload in the Ministry of Corporate Affairs also. So purchase. So how we can find out the purchase, by way of calling to the creditors and by way of seeing the bank statement. So credit purchases we can get to know from the creditors, and the cash purchases we can get to know from by way of seeing the bank statement. So while calling to the creditor, and you will ask, how you will ask, how much amount you need to pay? You will ask like that, sir, I need to pay only 1 lakh. So you need to ask like that. Then only the correct amount we can get. So next one, direct expenses as a percentage on purchase. When coming to the sales, we are having the two types of sales. Cash sales we are going to get by way of seeing the bank statement, and the credit sales we are going to get by way of asking to the debtor. This is general knowledge for purpose. So first of all, we have to see the gross profit calculation. Gross profit divided by sales into 100. Nothing but whatever the profit, gross profit is there, what is the percentage on sales we need to consider. Here percentage on sales only we need to consider. We should not consider the percentage on cost. If they are given the percentage on cost, we need to convert into the percentage on sales. For example, 1/3 on cost will become what, 1/4 on sales. I think you know all the details. So for that thing, I am not going to the basics once again. So sometimes if they given the gross profit percentage means fine. If they are not given the gross profit percentage means how we can find out, we can find out by way of preparation of what, previous year trading account. So by way of preparing the previous year trading account, we will take the previous year gross profit percentage. That profit we are going to add back, we are going to consider in the current year trading account also. If they given the growth means we will consider the growth also. So next we need to calculate the loss of stock. Sir, we are going to find out the closing stock as on the date of fire, but the total closing stock they will not give the cash. Why, sir? Because we are having the salvage value. What is the meaning of salvage value, So after occurrence of the fire, all the goods may destroy, but even though some of the goods may be saved, that goods we can sell at a less than cost. Okay, na? That cost we can recover from the customer, so we cannot recover from the customer. We can recover. That means this thing you can recover. For this reason, our insurance company will reduce from the claim. For that reason, closing stock minus salvage value, because this thing we can recover from the customer. For that reason, they will reduce the stock. And we need to add back what, firefighting expenses. Sir, what is the meaning of firefighting expenses, As on the time of occurrence of the fire accident, so we will take certain precautions in order to reduce the loss. Okay, now while taking the certain precautions, we may call to the fire engine. So fire engine, we will use the water tankers like that. Okay, now we are going to incur certain amount of cost. That cost also will be compensated by the whom? Will be compensated by the insurer. Why, sir? If we are not taken the precautions means our loss will be increases. If the loss increases, who has to compensate? The insurance company has to compensate. For that reason, firefighting expenses also will be compensated by the insurance company. So what is the formula for the loss of stock, Finally, they will compensate only the loss of stock. They will not compensate the closing stock as on the date of fire. So what is the formula for the loss of stock, Closing stock as on the date of fire minus salvage value plus firefighting expenses. We are going to get the loss of stock. And next, so we are going to discuss one by one. What is the step number 1, computation of loss of stock. So first step, we need to calculate what ma? Calculate the gross profit percentage. If they given the gross profit percentage means, then directly we can start with the second step. If they are not given the gross profit percentage means, what we need to do? We need to prepare the previous year trading account. By way of preparation of previous year trading account, we can get the gross profit percentage. And next one, what ma? Sometimes they will give two or more gross profit percentages. At that point of time, what we need to do? We need to consider the average gross profit. What is the meaning of average gross profit? So average is equal to sum of the observations divided by number of observations. For example, so they have given 10% and 20% amma. So 10 plus 20 divided by 2, that is equal to how much amma? 30 divided by 2. 15 percentage. So that's same like that we can consider, but as per our examination point of view, they will concentrate on which point amma? They will concentrate on first point. So next one, what is the step number 2 amma? We need to identify the closing stock. How we can identify the closing stock? By way of preparation of memorandum trading account. Sir, why we are going to call it as memorandum, sir? It is a rough account amma. Only for the calculation of closing stock we are creating the particular account, not for the accounting purpose, not for giving to the government organizations, not for uploading in the MCA portal, not for. So it is just a rough work. For that reason, we are going to call it as memorandum trading account. So memorandum trading account means current year trading account from the date of beginning of the current year opening till the date of 5. So here the closing stock will be the balancing figure. That means we need to find out the gross profit by applying the gross profit percentage. What is the step number 3 amma? Calculation of closing stock as on the date of fire minus salvage value plus firefighting expenses, then we will get the loss of stock. And finally we need to calculate the claim amount. How we are going to get the claim amount means, sir, we are having the two types of insurance, under insurance and over insurance or equal insurance. In the case of under insurance or in the case of full insurance or over insurance, the policy value we need to compare with the which one amma? The policy value we need to compare with the closing stock. Why we need to compare with the closing stock means, because we are going to take the policy value on the available amount of the closing stock. So for example, if you see the previous year closing stock, on that only you will take what ma? Policy amount. For that reason we need to compare with the which one amma? We need to compare with the closing stock. We should not compare with the loss of stock. And in the case of if the policy value is more means, then what is the claim amount? Loss of stock or policy value, whichever is lower they will say. But actually what we will get ma? Loss of stock only we will get. And next one what ma? In the case of under insurance, the policy value is less than closing stock. The policy value is what ma? Less than closing stock is called as what ma? Under insurance or over insurance? Under insurance. In the case of under insurance, average class will be applicable. Sir, what is the meaning of average class, sir? Sir, under insurance means we have not taken the policy for up to the closing stock value. So generally the policy will be given equal to the closing stock. But we have taken what under insurance or over insurance now? Under insurance. For that reason, they will compensate with proportion to the what ma? Loss of stock. So for that reason, what we need to do? So here the policy value is equal to closing stock means for the loss of stock, how much we will get? What we will do ma? We will cross multiply. So if we cross multiply, what we are going to get ma? Policy value into loss of stock divided by closing stock. That is the logic they will put here. So once again I am going to repeat the final step. So in the case of full insurance or over insurance, what is the meaning of full insurance or over insurance amma? Policy value is greater than or equal to closing stock, because we will take the policy only on the closing stock. At that point of time, what is the claim amount amma? Claim amount is equal to loss of stock. And next one, in the case of under insurance, the policy value is less than what ma? Closing stock. So average class will be applicable. What is the average class formula ma? Policy value into loss of stock divided by closing stock. Some of the people may write like this: loss of stock into policy value divided by closing stock. That is also permissible, no problem. So these are the steps we need to follow. So now we are going to see what ma? Now we are going to see the questions in order to get the more clarity. So please open our workbook. Question number 2. Okay guys, shall we start? Question number 2, page number 105. This is the basic sum. There are nothing adjustments are there. So for that reason, I will teach even though it is a basic sum, no problem. X Limited has taken out a fire policy for rupees how much amma? 1,60,000. What is the policy amount? 1,60,000 covering its stock. A fire occurred on 31st March 2022 and the following particulars are available. So what is the fire occurred date amma? 31st March 2022. Stock as on 31st December 2021. Sir, 31st December 2021 means they are following which year amma? They are following calendar year or financial year? They are following the calendar year. Sir, calendar year means, so 2021 is the which year amma? Previous year. And 2022 is the which year amma? Current year. Okay guys. So next, purchases up to the date of fire. That means which year amma? Current year purchases. Sales up to the date of fire. How much amma? 1,80,000. Current year sales. Carries inward. Commission on purchases to be made. How much amma? 2%. The 2% of commission is called as direct expenses, because on the purchases we are giving the commission. These are direct expenses, and carriage inward is also a direct expenses. Sir, gross profit percentage they have given. So gross profit percentage they have given means, that means we no need to create the previous year trading account, but they have given the gross profit percentage on what ma? On cost. On cost 50% means, what is the meaning of 50%? 50 divided by 100, that is equal to how much amma? 1 by 2. 1 by 2 on cost means on sales how much amma? 1 by 3. So now what they are asking amma? You are asked to ascertain the total loss of stock and amount of claim to be made against the insurance company, assuming that the policy was subjected to the average clause, and stocks always amounts to how much amma? 41,360. The salvage value will be compensated by the insurance company or will not be compensated? Will not be compensated by the insurance company. So let us start ma. Question number 2. So whether we need to prepare any previous year trading account amma? So no need to prepare the previous year trading account. So directly we are going to prepare what ma? Memorandum trading account. So calculation of value of closing stock as on the date of fire. So what is the format of the trading account amma? Particulars amount rupees, particulars amount rupees. Which account we are going to prepare amma? Memorandum or normal trading account amma? Memorandum trading account. So now we have to put the heading memorandum trading account of, what is the business name ma? Can you say the business name? X Limited of X Limited for the year. What is the year ending? What is the date amma? 31st March 2022. So particulars amount rupees, particulars amount rupees. Why we are going to call it as memorandum amma? It is a rough one. So opening stock will be on which side amma? Debit side. So what is the amount of opening stock they have given? Just a second amma. So 60,000. So on the debit side, 2 opening stock. How much amma? 60,000. So next one, purchase up to the date of fire. How much? 2,60,000. Which side amma? Debit side, 2 purchases account how much? 2,60,000. And they have given the sales. What is the buy sales amount? 1,80,000. And next one, carriage inward. Direct expenses or indirect expenses, amma? Direct expenses. So 2 carriage inward. How much, amma? 1,600. What is the next one, amma? They are given the percentage on commission percentage on. Commission percentage on purchases. How much, amma? 2%. It is also called as what, ma? Direct expenses. So 2 commission on purchase. So what is the total purchase, amma? 2,60,000 into how much, amma? Into 2%. That is equal to how much? 5,200. And next we need to calculate what, ma? Gross profit. So 2 gross profit. So please be careful while doing the gross profit percentage on sales. So they are given on cost on sales, amma. On cost 50% means 1/2 on cost. It will become what, ma? 1/3 on sales. Just a second, guys. 1/3 on sales. So what is the sale amount? 1,80,000 into 1/3. That is equal to how much, amma? 60,000. So now we can find out the closing stock. So add back all this 60,000 plus 2,60,000 plus 1,600 plus 5,200 plus 60,000. 3,86,800. $3,86,800. Now, what is the balancing figure, amma? By closing stock, 2,06,800. So this is what ma? Closing stock as on the date of 5. So this is the balancing figure. Okay, now next what we need to do? We need to calculate the claim amount. So step number 2, calculation of claim amount. For the calculation of claim amount, we need to consider how many values, amma? So we need to consider the 2 values. So what is the policy value, amma? 1,60,000. So what is the closing stock? 2,06,800. Sir, before that we need to calculate what, ma? Loss of stock. So calculation of loss of stock. So what is the formula for the loss of stock, amma? Closing stock as on the date of fire minus salvage value plus firefighting expenses. So what is the closing stock as on the date of fire, amma? As on the date of fire is equal to how much, amma? 2,06,800 minus salvage value 41,360. Why they are not going to compensate, ma? This amount we can realize by way of sale to the outside persons. How much? 1,65,440. Come on, online students, answer, amma. 1,65,440. So next, the policy value is 1,60,000 and what, ma? And the closing stock is 2,06,800. Sir, whichever is higher? Closing stock is the higher. That means under insurance or over insurance? under insurance. In the case of under insurance, what is the average class formula? Policy value into loss of stock divided by closing stock. How much we are going to get, ma? So what is the policy value amount? 1,60,000 into what is the loss of stock amount, amma? 1,65,440 divided by what is the closing stock? 2,06,800. 1,28,000 is the final answer of the claim amount. So these are the steps. So super amma. So 1,65,440 is the answer. So what is the final answer, amma? 1,28,000. So this is the simple question we have solved easily. So next we are going to see the second question completed. Third question. So when coming to the third question, we need to prepare what, ma? Trading account also. Here the most important point also we need to consider. So just a second, amma. I need to switch on and switch off the tab. So there is a tab technical issue. Just a second, guys. We can continue the section. Okay. The most important question, amma, we can see this type of questions in examination. So because the most important adjustments are also there here. So see the third question. So a fire occurred in the premises of Sri G. Venkatesh on 1/4/2022 and a considerable part of the stock was destroyed. So they did not give the considerable amount. What is the amount we need to find out by our preparation of what, ma? Trading account or memorandum trading account. A stock salvage value how much, ma? 28,000. And next Sri Venkatesh had taken a fire insurance policy for rupees how much, ma? 17,10,000 to cover the loss of stock or loss of fire, amma? Loss of stock. Okay, na? So what is the policy amount? 17,10,000. So in the answer, they have given the more amount or less amount, amma? Less amount. Now we need to change certain changes. So can you say the changes? 1,70,000. Huh? So here 1,71,000 is the policy value. When come to the sales, how much, amma? 24 lakhs. Huh? So when coming to the sales, 2,40,000. Is there any corrections? Stock, correct? Wages, 10,000. Wages, here 10,000, right? Wages paid during the year 10,000, right? There 1 lakh. Okay. So here only 18,000. So these are the correction we need to make. So what is the first correction, amma? Sales only 2,40,000. When coming to the wages, 18,000. When coming to the previous year wages, 1 lakh. And here the policy amount is 1,71,000. So that's all. So we need to see the important adjustments here. So you are required to ascertain the insurance claim of the company should claim from the insurance company of the loss of stock or loss of fire. Loss of stock, the following particulars are available. So purchases for the year 2021 and sales from the year 2021 and purchases from 1/1/2022 the 1/4/2022. That means again the calendar year or financial year, calendar year. So what is the previous year? The previous year is 21. What is the current year, amma? 22. So these are all the information related to which year, amma? Previous year. The sales also previous year. When coming to the purchases, current year how much? 1,82,000. Sales current year how much, amma? 2,40,000. Stock of opening stock or closing stock, amma? 1/1/2021 means previous year opening stock. Previous year opening stock. On stock on 31st/12/2021 is called as what, ma? Previous year closing stock. Wages of previous year 1 lakh. Wages of current year 18,000. Next one, Sri Venkatesh had in June 2021 consigned goods worth rupees how much, amma? 50,000, which is unfortunately were lost in the accident. Sir, in which year they have consigned the goods, amma? Previous year. 2021 means previous year. 2022 means current year. Sir, previous year loss. Okay, now previous year we are having a what, ma? Abnormal loss. We need to record on which side, ma? Abnormal loss should be recorded in the trading account credit side. Since there was no insurance covered taken, the loss had been borne by himself. So on that goods loss, they have taken any insurance policy? No, there is no insurance policy on the consigned goods. Total abnormal loss will be transferred to the P&L account. Okay, now if you prepare the P&L account, means total abnormal loss will be transferred to which account, amma? P&L. So here comes the most important point. Stock at the end of the each year from until the end of the calendar year, what, ma? Up to 2020 had been valued at cost less 10%, amma. So up to the previous year opening stock, they are valuing the stock at less than 10%. That normally we need to value the stock at what, ma? 100%, but they are valuing the stock at what, ma? 90% of the cost. That is the stock of previous year opening. So from 2021, that means what, ma? Previous year. However, there was a changes in the valuation of the closing stock, which was ascertained by adding what, ma? 10% on its cost. From the previous year onwards, they are going to value the stock at what, ma? 110%, adding the 10%. From the previous year or up to the previous year opening stock, they are going to value it how much, amma? 90%. But in the previous year, they have valued at how much, amma? 110%. We have to see the certain adjustments while doing the preparation of previous year trading account. So we can do the question. So question number 3, put the heading. Question number 3. So first we need to find out the gross profit percentage. For that gross profit percentage, what we need to do, amma? We need to prepare the working note 1. So go to the second page. Go to the second page and write the working note number 1. What is the working note number 1, amma? Calculation of gross profit percentage. Calculation of gross profit percentage. So we can find out by way of preparation of previous year trading account. So trading account of Sri G Venkatesh Venkat for the year ended what is the year ending, amma? 31st December 2021 is the previous year. So what are the columns we need to take? So we know the columns also. Particulars amount rupees. Particulars amount rupees. Particulars amount rupees and particulars amount rupees. What is the starting point, amma? Opening stock to opening stock. Which year opening stock, amma? Previous year opening stock. But while valuing the previous year opening stock, they are going to value at cost less 10%. So first of all, what is the value of opening stock, amma? 9 lakh. Sorry guys. 1,44,000 is the previous year opening stock they have valued. But they are correctly valued or wrongly valued, amma? Wrongly valued. So 1,44,000 is equal to 90. 1,44,000 is equal to 90. For us, we need to record 100 and 90, amma. 100. So that means 1,44,000 is equal to 90. But we required what, ma? For 100, how much? So how we can do, amma? 1,44,000 into 100 divided by 90. So cross multiplication in the costing you will do lot of questions like that. So 1,44,000 into 100 divided by 90. How much, amma? 1,60,000. Next come to the purchases. What is the purchases of the previous year? 9,38,000. Sales 11,60,000. So 9,38,000 by sales. How much, amma? 11,60,000. And next we are having the abnormal loss, na? Yes or no, ma? So what is the amount of abnormal loss? 5,000. 50,000. Okay. Abnormal loss is equal to how much, amma? 50,000. So what are the goods we sent on the consignment? We have totally lost of rupees how much, amma? 50,000. So is there any direct expenses left, ma? No. So while calculation of closing stock, they are valued at correctly or wrongly, amma? So wages are there. So what is the previous year wages, amma? 1 lakh. So 2 wages account 1 lakh. While valuing the previous year closing stock, they valued correctly or wrongly, amma? Wrongly. Excess of 10%. That means what? So 2,42,000 is equal to 110 or 100, amma? 2,42,000 is equal to 110. So 2,42,000 is equal to 110 means, so for us how much we required? 100. That means what we need to do, amma? We need to cross multiply. So how much we are getting, amma? 2,42,000 into 100 divided by 110. 2,20,000. So we are going to value it only at 100. So can you do the balance, amma? So 11,60,000 plus 50 plus 2,20,000. 14,30,000. So here also how much, amma? 14,30,000. So minus 1 lakh minus 9,38,000 minus 1,60,000. So 2 gross profit. 2,32,000 is the gross profit. Okay, na guys. So this is the balancing figure. How we can find out the gross profit percentage, amma? So can you say the gross profit percentage formula? So gross profit percentage is equal to gross profit divided by sales into 100. But you have to write the full forms in the examinations. So what is the gross profit, amma? 2,32,000 divided by, what is the sales, amma? Current year 11,60,000 into 100. How much, amma? 20% is the gross profit. We are going to directly apply on current year sales. Okay, na guys. Now we have completed this one. So come and prepare what, ma? Memorandum trading account. So first of all, what we need to calculate, amma? We need to calculate the closing stock and then loss of stock. So first one, step number 1, calculation of stock as on date of fire. Calculation of stock as on date of fire. So here, first of all, memorandum trading account. So what is the format, amma? So particulars, amount rupees, amount rupees. particulars amount rupees and particulars amount rupees, DR and CR. Sir, previous year closing stock will be the current year opening stock. We have done the previous year closing stock correctly or wrong, amma? They have done the wrong, but we have made the correct. So for that reason, so what is the previous year closing stock, amma? 2,20,000 will be the current year opening stock. So 2 opening stock how much? 2,20,000. Amma, can you say the current year purchases? Yes. What is the current year purchase, amma? 1,82,000 and 2,40,000 is the sales. So 2 purchases 1,40,000, 1,82,000 and by sales 2,40,000. Okay, na guys. So next we are having the wages. 2 wages. How much, amma? 18,000. In the book they have given 1,80,000. Please rectify. And also sales also 24 lakhs they have given. So rectify to 2,40,000. So what is the gross profit, ma? They have given. We need to find out. We need to find out the gross profit on sales. So 2,40,000 into 20%. How much, amma? 48,000. So can you say the balancing figure? Sir, in the previous year we are having the what, ma? Abnormal loss. In the current year we are not having the abnormal loss, amma. Okay, na? How much? 4,68,000 and 4,68,000. What is the balancing figure? 2,28,000. What is the meaning of this one, amma? By closing stock. Sir, they will compensate total closing stock or we need to do loss of stock, amma? We need to do the loss of stock. So this is the balancing figure. Okay, na guys, up to now. So next, calculation of step number 2. Calculation of loss of stock. So what is the formula for the loss of stock, amma? Closing stock as on date of fire. How much, amma? Closing stock as on date of fire? 2,28,000. Whether they have given any salvage value, amma? Yes. So what is the salvage value, amma? So 28,000 is the salvage value. There is no firefighting expenses. So minus salvage value. How much, amma? 28,000. So what is the closing figure? 2 lakhs is the loss of stock. 2 lakhs is the loss of stock. Finally, what we need to compute, amma? We need to compute the claim amount. So step number 3, calculation of claim amount. Okay, amma. So from which points we need to consider, amma? What is the policy value? 1,71,000. What is the closing stock? 2 lakh. 2,28,000. So whichever is higher, amma? Closing stock is the higher. So what is the average class formula? Here the policy value is greater than closing stock. So which thing is applicable? Average class. So what is the formula for the average class, ma? Policy value into loss of stock divided by closing stock. What is the policy value, amma? 1,71,000 into loss of stock 2 lakhs divided by 2 lakh for 28. 2,28,000. That is equal to how much? 1,50,000 is the ultimate claim amount. Okay, now why we need to apply the average class means we are going to take the policy on closing stock. So for the closing stock, that much amount of policy means for the loss of stock, how much? So that is the proportion we need to calculate. So finally we have completed the 2 questions. So next one. Come to the question number 4 is the most important question, amma. So because there is a special point in this. So shall we, guys? A fire occurred on 15th September 2021 in the premises of Sen & Co. From the following figures. Calculate the amount of claim to be lodged with the insurance company for loss of stock or loss of profit, amma. Loss of stock. Stock at cost on 1/1/2020. How much, amma? 40,000. Sir, 1/1 means what, ma? Previous year is the 1/1. Okay, na? So previous year is 2020, amma. Previous year is 2020. What is the current year? 2021. So stock on 1/1/2021. That means what, ma? Previous year closing stock and current year opening stock. Purchase during the previous year 80,000. Purchase during the current year 1,76,000. Purchase during the previous year 1,20,000 and purchase during the current year 2,10,000. So next, this is the most important point. So during the current year, the cost of purchase has raised by how much, amma? 10%. Okay, now. And above the last year level, amma, they are not giving the last year. When compared to the last year, they are not given. When compared to the what, ma? Last year level means the same period. Okay, now what is the current year period, amma? Current year period 1/1/2021 to 15/9/2021. So what is the previous year level? 1/1/2020 to 15/9/2020. So in this level, when compared to this level, in the current year, the purchaser what happened, amma? Increases or decreases? Increases by how much? 10%. So that means we should not apply the gross profit percentage of previous year directly. We should not apply. And next one, sales are also increases or decreases, amma? Increases. Selling price have been gone up by how much, amma? 5%. So salvage value of the stock is how much? 4,000. They have given the policy value, amma. So they have not given the policy value, nothing but we need to find out how much is the loss of stock. Okay, na guys. So loss of stock means we need to calculate the closing stock as on the date of fire is sufficient. So they have given the salvage value means we need to calculate the loss of stock also. Okay, na guys. So this here the most important point, what, ma? When compared to the previous year level, the purchase are going to increase by the 10%. When compared to the previous year level, the sales are going to increase by how much, amma? 5%. First of all, we need to consider those changes and then we need to apply the gross profit percentage. So okay, na? So start, amma. I will say no problem. So what is the question number, amma? Question number 4. So first of all, what we need to create, ma? Previous year data given means we need to find out the gross profit percentage by way of preparation of previous year. So how we can find out, ma? So working note number 1. Calculation of gross profit percentage of previous year. What is the previous year, amma? 2020. What we need to prepare? Trading account. trading account of what is the salmon konama SCN Sen and Co for the year ending 31st December 2020. We have to write the format. So what is the format amma? Particulars, amount rupees, and particulars amount rupees. Guys, so what is the starting point amma? Opening stock. So what is the previous year opening stock? 40,000. So to opening stock, how much amma? 40,000. So next, what is the previous year purchases? 80,000. So two purchases account 80,000. What is the sales of the previous year amma? By sales account. So previous year 1,20,000. Okay na guys. So next, what is the closing stock amma? How much? 60,000 is the closing stock. Okay na? We can easily find out the gross profit. Can you say the gross profit amma? Total 1,80,000. Total 1,80,000. And the balancing figure is called as what ma? 60,000. So to gross profit. Okay, now we can find out what ma? Gross profit percentage. So what is the gross profit percentage formula? Gross profit divided by sales into 100. What is the gross profit amma? 60,000 divided by sales how much? 1,20,000. That means 50% is a. That is equal to how much amma? 50% on sales or on cost amma? On sales. Now the most important point in this question is called as what ma? Current year trading account preparation, only the important point. So there is nothing mentioned there in the previous year related one. So step number 1, calculation of closing stock as on the date of 5. Calculation of closing stock as on the date of 5. So we have to prepare what ma? Memorandum trading account. Sir, here please open the 2 amount columns. So those are not the amount columns related to previous year and related to current year. So particulars. Sir, previous year and current year. Sir, previous year means not the total previous year amma. Current year period corresponding to the previous year. Okay na? Here also the particulars. Previous year and current year. Now I will say the dates. So what is the meaning of previous years are here? 1/1/2022 to 2022, 15/9/2020. So 1/1/2020 to 15/9/2020. What is the current year, amma? 1/1/2021 to 15/9/2021. Sir, so here correspondingly when compared to the previous year, so when compared to the previous year, our purchases are increased by how much? 10, amma? Our purchases are increased by 10% and our sales are increased by 5%. That means the same gross profit we should use or we should not use? We should not use. Because why, ma? That gross profit belongs to which year? Belongs to previous year. When compared to the previous year, our current year's purchase and sales are increases. That means first we need to adjust the current year sales and purchase and then we can take out the gross profit. So if you see here, so first of all, what is the given information we can record? So opening stock. So what is the meaning of opening stock, ma? Opening stock means previous year closing stock will be the current year opening stock. How much, amma? 60,000. So 60,000 related to current year, ma. Okay, na? 60,000 related to current year. Next one, can you say the purchase of the current year? What is the purchase of the current year, ma? 1,76,000. Guys, participate. 1,76,000. So next one, what is the sales of the current year? 2,10,000. Two sales by sales, amma. By sales account 2,10,000. I am recording on the current year. You have to observe. Okay, na? These are the things only available here. Yes or no? Related to current year. Is there anything else? There is no gross profit. We need to find out the gross profit. We should not apply the same profit. Sir, here what I am saying is opening stock is at 100, amma. There is no changes in the opening stock. For that reason, the same level of here I am taking the 60,000. So this will be the same 100. Okay, now there is a changes in purchase. There is no changes in the purchase. There is a changes in the purchase. So previous year purchases are 100%, amma. When compared to the previous year purchases, our current year purchases are increased by how much? 10%. So for that reason, I am taking the current year is equal to 110. Can you say the previous year purchases? So 1,76,000 equal to 110, and what is the 100? So how we can calculate, ma? 1,76,000 into 100 divided by 110. How much? 1,60,000. Okay, na guys? When coming to the sales, previous year sales is equal to 100, amma. What is the current year sales? Increased by how much? 5%. So 105. Can you say the previous year sales? So 2,10,000 is equal to 105. What is the amount for the 100? So that is equal to 2,10,000 into 100 divided by 105. How much amount? 2 lakhs. Are you understanding the concept? Now, we know the previous year gross profit. Please apply that previous year gross profit on sales of previous year. So 2 gross profit. 2 lakhs into 50%. How much, amma? 1 lakh. Are you getting the point? So 1 lakh is the previous year gross profit. We can find out the previous year closing stock. Yes, sir. How much? We can find out the previous year closing stock. 60 plus 60, how much, amma? 2,20,000. 2,20,000 plus 1. 3,20,000. And here also how much, amma? 3,20,000. So minus 2 lakhs, how much, amma? 1,20,000. Sir, can you say the previous year sales is equal to how much? 100. There is no changes in the previous year, amma. Previous year all are what, ma? 100. Can you say the current year sales is equal, current year closing stock is equal to how much? So what is the current year closing stock, ma? So is it 105, 110, 100? 105, 110, 100, amma? Answer. Guys, sir, nothing, we know already. There is one assumption, amma. Whatever the purchases are there will be the closing stock. Yes or no, ma? Whatever the purchase will be So we made the purchase, that purchase only will be left out in the closing stock. So here purchase is equal to how much? 110. For that reason, the current year purchase is also how much, amma? 110%. How much, amma? 110. So for 100, 1,20,000 is the closing stock, means for 110 how much, amma? 1,20,000 into 110 divided by 100, how much? 1,32,000. Super, well said, amma. Pardev, super. Dhanush, Pardev. Now we can find out the gross profit, but even though if you don't know the gross profit also is sufficient. So what is our ultimate target? To find out the closing stock. So we can say the closing stock also, gross profit also, how much, amma? 1,32,000 plus 2,10,000. 3,42,000. 1,06,000. It is not necessary, but we have find out. Sir, how we have got the 110, amma? Whatever the purchase are there, that purchase 110 we have taken here. So are you getting the point? So like this, we need to understand this question is the most important question. This question we may get in the examination. So now easily we can find out what, ma? Calculation of loss of stock. So what is the formula for the loss of stock? Closing stock. What is the amount of closing stock, amma? 1,32,000. So minus salvage value. How much, amma? 4,000 given in the question. How much we are going to get? 1,28,000. So up to here only the answer, because they have not given the policy value, all the things. So this is called as what, ma? Loss of stock. Okay, now what is the most important point here in this question? This purchase assumption is the most important point. So we have completed the how many questions, amma? 3 questions. 4 means we have done the first question. So next one. So next we are coming the one of the most important model once again. So question number 5. Question number 5 I will explain. Question number 5 I will explain in detail. Question number 6 also I will explain, but you have to do the homework. Okay, na? So please understand the concept, amma. Here we are going to get the abnormal items. So don't worry, you no need to mug up or anything, just understand the concept. In the case of abnormal items, we should not disclose the abnormal items in the trading account, amma. So what we need to do the abnormal items, we need to eliminate wherever it was available. That's all. So we need to eliminate the abnormal items. I will say how we need to eliminate. Sir, on 1/4/2021, the godown of Y Limited was destroyed by the fire. The godown of Y Limited was destroyed by the fire. The record of the company revised the following. So stock on 1/1/2021, how much, amma? 75,000. 1/1/2021 means the previous year is called as 1/1/2021. So current year is called as 1/1/2022. So 2021 is the previous year and 2022 is the current year. So next one, stock on 31/12/2021 means closing stock. Closing stock of the previous year will be the opening stock of the current year. Purchase during the previous year, how much, amma? 3,10,000. Sale during the previous year, how much, amma? 4 lakhs. Purchase during the current year, how much? 75. And sale during the current year, how much? 1 lakh. Okay, na guys? So next, here comes the Gabbar Singh like that. Here also one biggest Gabbar Singh is there. So in valuing the closing stock on 1/1/2020. Sir, here 2020 means previous year or current year, amma? While valuing the previous year closing stock, 5,000 was written off. What is the meaning of written off, amma? They have reduced the 5,000. Whose cost is how much, amma? 4,800. Sir, why they have written off means because of abnormal item they have written off, amma. So what is the actual cost of abnormal item? The actual cost of abnormal item is only 4,800, amma. Actual cost is only 4,800. How much amount is presented in the closing stock? 4,800 means you can reduce the 4,800. But instead of reducing the 4,800, how much you are reduced? You are reduced the 5,000. Excess reduce. So excess reduce means what we need to do? You need to add back. You need to add back how much, Amma? So 5,000 minus 4,800. You need to add back 200 to the previous year closing stock. Okay, na guys. So next one. Sir, that means, sir, closing stock 500. So we have made the adjustment related to the closing stock means where they are available more. They are available on the purchase of the previous year. Okay, now. So that means in the purchase of the previous year, what is the abnormal item is presented? 4,800 or 5,000? 4,800. So for that reason, so during the previous year purchase, how much we need to reduce? 4,800. Guys, you should not mug up the point, Amma. So the stock is available in the closing stock means where it has presented previously, it was presented in the purchase. The same assumption we have taken in the question number 4 also. Are you getting the point, Amma? So for that reason, how much amount we need to reduce from the purchase? 4,800. Which purchase, Amma? Previous year purchase. The important point. Next one, Amma. The part of the stock was sold in 2022. That means current year they have sold the previous year, Amma. Current year they have sold at a loss of how much? 400 at 2,400. So the actual part is how much, Amma? 2,400. So at a loss of 400 they have sold. That means what is the actual selling price? 2,000. So we need to reduce. This is abnormal sale or normal sale, Amma? Abnormal sales. We need to reduce the abnormal sales from the current year sales. From the which year sales, Amma? Current year. Because they have made the sales in 2021 or 2022. 2022. The stocks always was how much, Amma? 5,000. The go down and the cost of which is fully insured. Fully insured. Indicate the above amount, the claim to be against the insurance company. So you need to identify the claim. They have not given the policy value. Whatever the amount of loss of stock will be there, that will be the claim amount. Okay, na? So here comes, I will discuss question number 5. So these books are available in shikaratutorials.in. So go to the Chrome or Google, whatever it is. So type the shikaratutorials.in. You can visit our website. In our website, there are free resources. From the free resources, you can get these notes as material and as well as classes. Thank you. So question number what, ma? Question number 5. So first what we need to find out, Amma? They have given the gross profit. They have not given the gross profit percentage. For that reason, we need to prepare what, ma? Previous year trading account. In the previous year trading account only, we are having the adjustments, and current year trading account also one of the adjustments is there. So working note number 1, calculation of gross profit percentage of previous year. What is the previous year, Amma? 2021. How we can find out the gross profit percentage, ma? By your preparation of trading account. So what we need to do, ma? Trading account of, what is the name, ma? Y Limited. Trading account of Y Limited for the year ended 31st December 2021. So what is the format, Amma? Only single column. You don't need to open normal items, abnormal items like that. Simply we can eliminate wherever the abnormal item is presented. The simple method, if you follow this method, within a less time, the answer also will be completed. Okay, na guys? So particulars, amount rupees, on particulars and amount rupees. Okay, na guys? What is the starting point, Amma? Opening stock. How much the opening stock? 75,000. There is anything to adjust the opening stock ma? No. So come to the two opening stock. How much? 75,000. And next. So what is the purchase value amma? So current previous year purchase how much amma? 3,10,000. But in this we are having the abnormal item of rupees amount how much amma? 4,800. Why we have estimated amma? Because in the closing stock they have made the adjustment, means in the purchase is there any abnormal item? There is no abnormal item. There is a abnormal item. So purchase total, right, in the two purchases. What is the purchase total amount? 2,10,000. Huh? So 3,10,000 minus what is the abnormal item presented amma? 4,800. It was available in the purchase, so that we are going to reduce. So how much we are getting amma? 3,05,200. Sir, we can follow this method. Yes, you can follow this method. Okay na guys. Buy sales how much amma? Sir, in the previous year sales there is no abnormal sales amma. In the current year sales only we are having. What is the previous year sales? 4 lakhs. And next, buy closing stock. What is the actual amount of closing stock given in the question amma? 80,000. But what they have happened amma? In this 80,000 they have written off how much? 5,000. But actually how much amount they need to return off? 4,800. So they have excess written off. For that reason add back how much amma? 200. How did we get the 200? 5,000 minus 4,800. So they have excess write off. For that reason we are going to add. If they have written off the less amount, we need to return off the another amount also. How much is the total amount amma? 80,200. Some of the members they will write 82,000 in exam tension. Okay na guys, this kind of mistakes they will do. So what is the gross profit we are getting? 4,80,200 to gross profit. How much amma? 1 lakh. So we can find out the gross profit percentage. Yes. So what is the gross profit percentage formula? Gross profit divided by sales into 100. That is equal to how much amma? What is the gross profit? 1 lakh divided by sales 4 lakhs. So 1 lakh divided by 4 lakhs into 100, that is equal to how much amma? 25%. Okay na, this 25% we need to apply on the current year sales. Sir, this 80,200 correct amount or wrong amount amma? Correct amount. This thing will be the opening stock of the current year. So go to the main answer. So what is the step number 1 ma? Calculation of closing stock as on the date of fire. Calculation of closing stock as on the date of fire. How we can find out the closing stock as on the date of fire ma? So by way of preparation of memorandum trading account. So what is the format? We know ma, particulars, amount rupees and amount rupees. So what will be the opening stock ma? Previous year closing stock will be the opening stock. Two opening stock. How much amma? 80,200. Okay na. Next, is there anything adjustment of purchase amma? No, we have adjusted in the previous year itself. How much the current year purchase amma? 75,000. 75,000. Buy sales, how much amma? Sir, in that 1 lakh we are having the abnormal sales or normal sales amma? Abnormal sales. How much abnormal sales are presented? So they have sold what ma? The stock valuing of rupees how much? 5,000. Here amma. The part of this stock was sold in 2022 at a loss of how much amma? 400 of at rupees how much? 2,400. The actual stock, the actual selling, the actual cost is equal to 2,400. They have sold at a loss of 400. That means what is the actual selling price? 2,000. Normal sales, abnormal sales amma? Abnormal sales. 2022 means current year. So minus 2,000. Because this is abnormal item, wherever the abnormal item is presented, we have to adjust. So how much amma? 98,000. We know the gross profit percentage. So gross profit percentage formula 98,000 into 25%. How much amma? 24,500. Now we can get the closing stock. 80,200 plus 75,000 plus 24,500. 1,79,700 minus 98,000. 700. 81,700 is the closing stock. So this is the balancing figure. And next, what is the next point amma? Calculation of loss of stock. How we can find out the loss of stock ma? Closing stock as on the date of fire is equal to how much? 81,700 minus salvage value. How much amma? 5,000. How much we are getting? 76,700 is the loss of stock. So here there is no policy value. The claim amount will be what ma? Loss of stock. Claim amount is equal to the loss of stock. That is equal to 76,700. So this is the ultimate value. Sir, are you getting the new point amma? So like this simple calculation also we can do. Wherever the abnormal item is presented, we need to eliminate. Here how much amma? 4,800. Why we have added excess reduction, low reduction amma? Excess reduction, by this reason we have added. And what is the next most important point? Here we comes the abnormal sales we have written off. And next question amma. So question number 6. Sir, on 39/2022, sorry, is it visible? The stock of Harshavardhan was lost by the fire accident. From the available records, the following information is made available to you, enable you to prepare the statement of the claim of the insurer. So the stock on 1/4/2021, that means the previous year opening stock. Sir, 1/4 they are saying means what is the previous year amma? So 21, 22 is the previous year. 22, 23 is the current year. So that means what is the stock ma here? 75,000 is the opening stock, and stock at 31st March 2022 is the previous year closing stock. Purchase less returns for the year ended 31st March 2022. How much amma? 5,07,500 previous year purchases, and purchase less returns from the year ended 31st March 2022. Previous year sales, purchase less returns up to the 39/2022 is the current year purchases and the current year sales. So this is the most important point you need to see. In valuing the stock on 31st March 2022, that means which year amma? Previous year closing stock. Due to the obsolescence, 50% of the value of stock was originally cost how much amma? Originally the cost of obsolescence item is how much? 12,000. So 12,000 is a normal item or abnormal item amma? Abnormal item. How much we need to reduce from the closing stock? Total 12,000 we need to reduce, but how much we have reduced? We have reduced only the 50%. So 50% of 12,000 means how much amma? 6,000 only we have reduced. How much amount need to reduce? We need to reduce the further 6,000. So further 6,000 we need to reduce from the closing stock had been written off. In May 2022, that means which year amma? Current year. So not only from the closing stock we need to reduce the 6,000, we need to reduce the 12,000 from the previous year purchases. Sir, the stock of obsolescence is presented in the closing stock means that was came from the where ma? That was came from the current previous year purchases. For that reason, in the previous year purchases, the total abnormal item of how much we need to reduce? We need to reduce the total 12,000. And in the May 2022 means which year amma? Current year, 3/4 of these stocks had been sold. So 3/4 of the stock means how much amma? So 12,000 into 3/4, how much? 9,000. So 9,000 value of stock, they were sold at 90% of the original cost. So what is the original cost amma? 90,000 is the original cost. They have sold at 90%. So 90% into 90,000, how much amma? Just a second, guys. 8,100. So this 8,100 only the abnormal sales. We have to reduce from the current year sales or previous year sales or current year sales. And it is now expected that the balance of the obsolescence stock would also be realized at a which price amma? Same price. We are also the balance of the abnormal can also be realized at which price amma? Same price. A subject to the above, the gross profit has been remained uniform throughout the stock. The value of how much amma? 14,400 is the Solvay's value. So let us do now, or you will do on your own now? Huh? From the previous year closing stock how much? 6,000. Previous year purchases how much? 12,000. And current year sales how much? 90,000. Sorry, 9,000 into 90% is how much? 8,100 you have to reduce. The same formula what we have done in the previous question, the same you have to do here also. Nothing is worry. Okay now. So next one. So double insurance, the most important concept. Just a second, guys. Okay, guys. We can do this question, the most important. They may ask in the examination, double insurance or single insurance amma? Double insurance. So question number 7. Let us participate ma. A fire occurred in the premises of Mrs. Bad Luck Traders. The name itself what ma? Bad Luck. For that reason, the fire accident is occurred how many times? 2 times. So twice during the accounting year on 21-22, that is on 31st August 21. So in 21-22 on which date amma? 31st August 21, and again on the 30th November 21. So on the second time. From the following particulars, calculate the claim to be lodged in respect of the goods lost by fire on the aforementioned date. So what we need to do amma? We need to find out the goods lost by fire as on the previous year, first time loss, fire accident, and second time fire accident. The stock as on 31st March 2021. That means what ma? He is valuing it how much? 59,000. So 31st means they are following which year amma? Financial year or calendar year amma? Financial year. Twice in the accounting period of 21. Sir, 21. What is our current year? 21-22 is the current year. 21-22 is the current year. Okay na guys? Then what is the previous year ma? 2021 is the previous year. So this is called as 59,000 is called as what ma? Previous year closing stock or current year closing stock? Previous year closing stock. The purchase from 1st April 2021 to the 31st August, how much amma? 3,45,000. First time or second time? First time purchases. The purchase for the 1st September 2021 to the 30th November. Second time purchases. How much amma? 1,90,000, of which the cost of 45,000 was received on with date ma? On 10th December 2021. So that means what is the meaning of that 45,000? Goods in transit. What is the meaning of 45,000 amma? Goods in transit. Next. Sales for the period from 1st April 2021 to 31st August. First time or second time? First time loss how much? 4,71,000. The sales from period of 1st September 2021 to 30th November 2021, how much amma? 2,25,000. This is called as second time sales. This includes the old furniture amounts to how much amma? 27,000. The furniture means capital expenditure or revenue expenditure amma? Capital expenditure, what we need to do? We need to reduce from the revenue expenditure. What is the actual sales? 2,25,000 minus 27,000. So 97. 1,98,000. A company earns a steady rate of how much amma? Gross profit 20%. That means no need to prepare the previous year trading account at the beginning of the year 2021. However, the selling price raised by how much amma? 20% from the month of April. So they have mentioned selling price raised by 20%. So they did not mention when compared to the previous year level like that. If they mention the previous year level means same like what ma? Question number 4. The value of the goods always how much amma? 30,000 and 2,000. For 30,000 on which date amma? 31st August 2021. That means what ma? First time loss or second time loss? First time loss. And 2,000 is the second time. So always value respectively. The firm had taken a fire insurance policy how much amma? 45,000 on 1st April 2021. At the time of receiving the insurance claim on 31st August 2021. That means what ma? On the date of first time fire accident, no additional premium was paid to restore the insurance policy to its original amount. That means what ma? After completion of first time fire accident, they did not pay the what ma? Premium amount from there onwards. That means what ma? The policy value will be same or different? The policy value will be different. If they paid what ma? If they paid the same policy value will be the for the second time loss also. Manod. But what he has done ma? He has not paid the premium amount because loss was happened like that feeling. The policy was subject to a what ma? Average clause. So we need to do one by one. Okay na? So what are the adjustments we are having? Only at the time of second time or first time amma? Second time adjustments only we are having this adjust time goods in transit like that. Okay na guys? So we can do. Okay guys. So please keep the question number what ma? 7. So question number 7. Double insurance or double loss. So you can find out the FA material from the shikratutorials.com. Go to the shikratutorials.in. In that website, the free resources are available. From the free resources, you can take the materials. Not only the materials, you can see the classes also. So Indian politics, for you only I am saying. Okay guys, so what we have to do, Amma? First time, for the first time, directly we can prepare the trading memorandum trading account at the time of first time loss, because they have given what ma gross profit percentage. So memorandum trading account. So what is the format, Amma? Particulars amount rupees and particulars amount rupees. Can you say the opening stock, ma? So this is the first time loss, ma. What is the first time loss date? 1st September 2021. First September 2021. Can you say the opening stock, ma? What is the opening stock? So here will be the data. 59,000 is the opening stock. So it is not visible. Okay guys, just a second. Amma. Just a second guys. So what is the opening stock, ma? 59,000. So two opening stock, how much? 59,000. So next, what we need to write, ma? Two purchases. Whatever the amount of purchase, ma. Purchase from 1st April to August, how much? 3,45,000. So it is not come, ma. So whatever the purchase, amma, opening stock is 59,000. Are you clear? Okay, na. What are the purchase for the 1st April 2021 to 31st August, amma? 3,45,000. So 3,45,000. Okay, next one. Sales, how much, amma? Sales for the period of 1st April 2021 to 31st August, how much, amma? 4,71,000. Two sales, buy sales, amma. Buy sales 4,71,000. So is anything else? So can you say the gross profit? Sir, just a minute. We should not apply the straight away the same gross profit. Yes or no, ma? Because there is a rise in the gross profit. So go to the working note 1. So what is the working note 1, sir? So please leave one more page also and then write the working note number 1. So working note number 1. Calculation of gross profit percentage for current year. Calculation of gross profit percentage for the current year. So what is the normal profit, amma? 20% for the previous year. So I am taking the sales is equal to 100%, 100 rupees. Sales is equal to how much, amma? 100. Now on that gross profit is equal to how much will be there? 20. Gross profit is equal to how much, amma? 20. Then what is the total sales, amma? 120. What is the total sales? 120. Sir, on this 20 rupees is the gross profit, and again the selling price increases to how much, amma? One more 10%. So 20, wow, how much is the increasing? And again the sales are increases by how much, amma? 20%. So can I write like this? So here the sales will become how much? 100 plus 20%, that is equal to how much, amma? 120. 120 means what is the excess revenue we are going to get? The excess revenue we are going to get 120 minus 100, that is equal to how much, amma? 20. Here 120 rupees, and here how much, amma? Here also 20 rupees. What is the total profit we are going to get? 40 rupees. What is the selling price now? 100 or 120? The selling price is 120 rupees. So the same presentation I will do, ma. So here the sales, here the gross profit. Previous year sales is equal to 100. If it is a previous year sales 100 means whatever the profit we are going to get, ma, 100 into 20% how much? 20 rupees. Are you getting the point? And what is the excess sales, amma? Excess sales at the rate of how much? 20%. So 100 into 20%, how much, amma? 20. Here also 20. This excess sales also becomes to profit. Excess sales also becomes to what, ma? Profit. What is the total profit? 40. What is the total sales? 120. So can you say the gross profit percentage, ma? So gross profit percentage is equal to gross profit divided by sales into 100. That is equal to how much, amma? 40 divided by 120 into 100. That is equal to 33.33%. In shortcut, we can call it as 1 by 3. 1 by 3 on sales or 1 by 3 on cost, amma? 1 by 3 on sales. I think did you get this point? Sir, actual sales are 100. If it is 100, how much of gross profit we are going to get? 20 rupees. Now the sales are increased to how much? Sales are increased to 20. This 20 rupees is the excess sales. This is excess profit we are going to get. How much, amma? 20. Total how much? 40. 40 divided by 120. Now the people will think like that, ma. 20% plus 20%, it will be the profit. It will be the 40%. Not like that. We should not think like that, amma. So the gross profit will not be the 40%. Gross profit is how much? 33.33%. Now this one we can apply on current year first time sales. How much, amma? 4,71,000 into 33.33%. The best option, apply 1 by 3, amma. 4,71,000 divided by 1 divided by 3. How much? 57th. 1,57,000 is the gross profit. So, but this is not the balancing figure. What is the balancing figure, amma? Closing stock. How much? 5,61,000. 5,61,000 What is the balance amma? 90,000. Okay na guys? So now what we need to find out amma? Loss of stock. Step number 2, calculation of loss of stock. What is the formula for the calculation of loss of stock ma? Closing stock as on the date of fire. How much? 90,000. What is the first times always value amma? 30,000. If you reduce, how much we are going to get ma? 60,000 is the loss of stock. We need to compare with which policy? We need to compare with the policy amount. So third point, calculation of claim amount. Which values we need to consider amma? Closing stock and the policy value. So what is the closing stock? We have find out 90,000. And what is the policy value amma? What is the policy value given? Total policy value 45,000. So under insurance or over insurance amma? Under insurance. In the case of under insurance, what we need to apply amma? Average clause. What is the average clause formula? Policy value into loss of stock divided by closing stock. So what is the policy value? 45,000. What is the loss of stock? 60,000 divided by 90,000. That is equal to how much? How much amma? 30,000. Okay na? This is the claim amount. While considering the second time loss of stock, second time policy value, how much we need to consider? So 45,000 of the policy minus how much amma? 30,000, because already we have got the claim. What is the next time policy value? The next time policy value is 50,000. Not only that one, we are having the second most important point also we can discuss. So first time claim was completed amma. Okay na? Is there any doubts up to here? No. Now we are going to see the second time loss. So second time loss, we can directly prepare what ma? Memorandum trading account. So please prepare the memorandum trading account amma. Memorandum trading account of which time loss amma? Second time. What is the second time date? 31st August is the first time. What is the second time amma? 1st September to 30th November. So 30th November 2021. Can you say the opening stock? Previous year closing stock will be the current year opening stock. What is the previous year closing stock? 90,000. But we should not consider the 90,000. Why sir? Because whatever the salvage value we are having, that is only in our hands. Okay na? Because 90,000 we have lost ma. 90,000 is the stock as on the date of fire. But in that, what is the available stock with us? Only 30,000. For that reason, the insurer will compensate or will not compensate, Amma. The insurer will not compensate. For that reason, we need to consider only how much? We need to consider the 30,000 because this stock only is available in our hand. So that is the most important point. To opening stock. How much, Amma? 30,000. We should not consider the 60,000. Okay, na guys. And next there are adjustments, Amma. So in the purchases, purchase from the 1st September 2021 to 30th November 2021, amount of rupees how much, Amma? 1,90,000, of which the goods costing how much, Amma? 45,000 were received on 1st December 2021. 10th December 2021. What is the date of fire, Ma? So date of fire accident is happened on which date? On the November 10th. That means as on that date there is no purchase. There is no purchase of rupees how much? 45,000. So what is the actual purchase? 1,90,000 minus 45,000. How much, Amma? 1,45,000. Are you getting the point? Now purchase, how much we need to take? So two purchases account 1,95,000, Amma. 1,90,000. Okay. 1,90,000 minus 45,000 is available. There is no available. For that reason, we should not consider. If you consider this stock, will be available on where, Ma? Closing stock. But as on that date, there is no closing stock. Having the closing stock, there is no closing stock. But which was received on which date? 10th December after completion of 30th November. So what is the amount, Amma? 1,45,000. Can you say the sales amount? What is the sales amount, Amma? So sales for the second time, how much, Amma? 2,25,000. In this, we are having the sale of furniture. So we should consider, we should not consider. We should not consider 2,25,000 minus what is the sale of furniture, Amma? 27,000, because this is a capital receipt. How much? 1,98,000. Can you say the gross profit percentage, Ma? 33.33%. So how much? 1,98,000 into 1 by 3. 66,000. Better to apply 1 by 3, Amma, when there is a 33.33%, because in the points we will get. How much is the total? $2,41,000 and 2,41,000. What is the balancing figure? This is called as closing stock. How much, Amma? 43,000. Can you get the logic? So next, what we need to find out, Ma? Loss of stock. So what is the formula for the loss of stock? So loss of stock is equal to closing stock as on date of fire. So what is the closing stock as on date of fire, Ma? 43,000. Can you say the second time Solvay's value is equal to 2,000? What is the amount we are getting? 41,000. Are you getting the point, Ma? Guys, participate, Ma, online students. So 41,000. So this is called as what, Ma? Loss of stock. This is called as double insurance or single insurance, Ma? Double time insurance. So we have to compare with the claim amount. For claim amount, which amount we need to consider? So this is the step number 3. So can you say the policy value now? Updated policy value. Normally updated normal policy value is how much, Amma? 45,000. So 45,000. We have received the claim of rupees how much? 30,000 at the time of first time. What is the actual amount now? 15,000. Can you say the closing stock as on date of firma? 43,000. So average class will be applicable or will not be applicable, amma? Will be applicable because it is under insurance. So what is the formula, amma? Policy value into loss of stock divided by closing stock. What is the policy value, amma? 15,000 into what is the loss of stock? 41,000 divided by 43,000. 14,300. Okay, na guys? So like this, we are going to complete the second time. So double insurance, what is the most important point, amma? We should not consider the closing stock of first time directly. We should consider only what, ma? Salvage value of only at the time of first time we should consider as a opening stock. And there is a most important point is called as what, ma? Calculation of gross profit. So totally we have completed which one, amma? By the end of this section we completed the loss of stock. Now we have to see the loss of profit. For the loss of profit, we are having the steps. First we need to discuss the steps and then we need to start the section. Okay, guys? So just a second. Oh, where is this space? Okay, amma. So where it gone? Okay, now the ready. Hey. Reverse came. Just a second. So these are the steps. I will explain with the concept, amma. So with the help of that concept, you can remember the steps easily. Why they have brought these steps? So these all the steps are favorable for the insurance company. For that reason, whichever is lower only will be there. All these steps, whichever is lower, whichever is higher, amma. Whichever is lower. Don't worry, guys. I will send this one. So step number 1, calculation of indemnity period. Sir, what is the meaning of loss of profit first of all? So loss of profit means we have lost the sales. For that reason, we have lost the profit. So ultimately, they will compensate the profit but not the sales. Which profit they will compensate, sir? Always they will compensate the gross profit. But here they have followed the different kind of approach. I will tell you, no problem. First of all, how much time they will make the compensate means they will make the compensation for indemnity period. What is the meaning of indemnity period, sir? Period given in the policy agreement or period given in the question, whichever is lower. That many months they are going to provide you the loss. So here next we need to think what is the calculation of gross profit, normally gross profit divided by sales into 100. But here why they have considered the net profit plus institute standing charges? What is the meaning of institute standing charges and what is the meaning of why they have taken the previous and the turnover means? So just simple, amma. I will take one of the example. So if you see here, I am going to take the trading and P&L account. Sir, if you understand the steps, the method is simple. If you know the steps, finally the answer will get easily. Not like a loss of stock. So many adjustments will be there. Not like that, amma. So trading and profit and loss account. What is the starting point of the trading account? To opening stock is the first point. And next one what ma? 2 purchases. And next buy sales by closing stock. And ultimately what we will get ma? 2 gross profit. We are having the direct expense also, but I am not taking, no problem. And next what we will get ma? P&L account. In the P&L account 2 gross profit by gross profit amma. By gross profit. So we will brought for here. Here we are having the certain expenses. I am taking the certain expenses like salary. Okay na, advertisement. Salary, rent. Next we are having what are the electricity. That kind of expenses are there. If you reduce, then what will get ma? Net profit is the balancing figure. Sir, here, sir, even though if you are not having the sales also, what you need to incur? You need to incur the salary, you need to pay the rent, you need to pay the electricity. These are called as, in our point of view, they are called as what ma? Charge against the appropriation amma. Charge against profit. Even though you are having the profits or not having the profits, even though you are not having the sales, these are the compulsory expenses we need to incur. For that reason, as per the insurance point of view, these are all called as what ma? Standing charges. So as per which point of view ma? Insurance point of view. So these are the compulsion. If we are not having the sales means whether we can compensate these all the things are? No. If you are not having the sales means there is no gross profit. If there is no gross profit means we cannot compensate, by way of end up what we are going to get, net loss or net profit? Net loss. For that reason what the insurer will say means, so I will consider some of the expenses, some of the fixed expenses, some of the standing expenses. So because here all the most of the organizations, the salary is the biggest expense when you see the salary, and remaining all the things are somewhat lowest expenses. So for that reason the insurance company accepted to give what ma? Only they only compensate the salary. Here the salary is called as insured standing charges. All the three expenses is called as what ma? Standing charges, but the salary is called as what ma? Insured standing charges. So they apply the reverse working amma. So net profit plus standing charges, whether we get the gross profit or not ma? Yes, we will get the gross profit. So net profit plus standing charges. So then in the denominator, in the numerator, what they have taken ma? Instead of taking the gross profit, they have taken the net profit plus insured standing charges divided by turnover only. Which turnover we need to consider? Previous year turnover, because first we will find out the which year turnover amma, which year gross profit percentage, previous year gross profit percentage. For that reason we will consider the previous year turnover. So this is the concept of standing charges and insured standing charges, and why the formula come into the picture. So percentage ma? Gross profit percentage here, the not the gross profit amma, we need to make it as percentage. So gross profit percentage is equal to net profit plus insured standing charges divided by previous year turnover. And next calculate the short sales. Sir, what is the meaning of short sales, sir? Short sales means, sir, normally the fire accident is the indemnity period from 1/4/2024 to 30th August 2024 amma. This is the indemnity period. For example, this is called as what ma? Indemnity period. In this period we are going to lose the sales. So we need to compare this period sales with the previous year period sales, correspondingly previous period. That corresponding previous period turnover is called as what ma? Standard turnover. Sir, why we need to consider in the same means? So if you take the seasonal businesses, in the summer, if you take the cool drinks, in the summer there will be the more sales. Okay, in the winter there will be the less sales. If you take the sweaters also, in the winter there will be the more sales. In the summer there will be the less sales. For that reason we need to correspond it with the same, corresponding to the same time or total year amma, corresponding to the same time. We will take this is the base. Okay now, because if you compare with the previous, okay, daily what we will do ma? We will compare with the previous day. In previous day we have done like that. In today we need to perform very well. Like that we will do. So that standard turnover is the base. Okay, now for that we have to trend. We have to add back the trend. Okay, we are estimating that what ma from based on the previous experience. Now every year we are going to increase the 10% of the sales. So we are going to take the base. Okay, if it is a 1 lakh rupees amma, in that period corresponding to the previous period means which year amma, 1/4/2023 to 30th August 2023. In that period we have made the sales how much? 1 lakh. So trend adding 10%, how much amma? 10,000. What is the total sales? 1,10,000. Even though we have incurred the loss in this immunity period, we have made the 20,000 sales. So reduce the 20,000 sales, because the 20,000 sales will be compensated by the insurer. They will not compensate amma. They will compensate only the actual loss. So that thing is called as short sales. We are comparing to the corresponding period sales and we are getting what ma? Short sales. Sir, they are going to compensate the loss of profit, loss of sales, loss of profit. For that reason we need to apply what ma? For the short sales we need to apply the gross profit. Are you getting the point? So short sales into gross profit is the actual loss they need to compare. Like you can think like a closing stock as on the date of fire. You can think like a what ma? Closing stock as a rate of fire. Short sales into the gross profit is the loss of profit actual. And we are having the adjustments now there also. What we will do ma? Minus always value. So plus firefighting expenses. Here also we are having certain additional admissible expenses. Sir, what is the meaning of this additional admissible expenses, sir? So additional, if you incur the additional expenses, we will make the additional turnover. For example, sir, here imagine this is a premises which was destroyed. Okay, now if you are doing the business from this premises which was having the happened the fire accident, we will get the sales of only 1 lakh amma. We will get the sales of only 1 lakh. So there is a correspondingly in our street only there is one more building. This is a big building. So if you take the rent of this building, okay, now we can increase the turnover. We can increase the turnover by 4 lakhs. That means what is the total sales we will do if you enter into this building amma? 5 lakh sales we will do. What is the increased turnover? 4 lakhs. Okay, now we will increase the turnover. On that if you apply the gross profit percentage, so we can take the gross profit as 10%. How much amma? 40,000 is the profit. 40,000 is the loss of profit. They are losing the profit, they are not losing the profit. They are not losing the profit. If they are not losing the profit, this much amount no need to compensate by the insurer company, insurance company. Are you getting the point? For that reason, but he need to incur the rent of 10,000. He need to incur the rent of 10,000 excess rent. 10,000 excess rent. For that reason, will you accept it, this proposal? If you think from the insurer point of view, how much cost you are additionally incurring? 10,000. Because of that, how much loss is saving? Totally 40,000. Not we should not take the sales amma. We should take what ma? Gross profit on additional sales. Okay na. So we are incurring the actual expenses how much? 10,000, and we are getting a saving how much amma? 40,000. So how much you will compensate? You will compensate the 40,000 na. You will give the 10,000, you will give the 40,000. Which is the best option? Giving 40,000 is the best option. Giving 10,000 is the best option. Giving 10,000 is the best option. For that reason, what are the first two steps? Actual additional expenses is equal to how much? 10,000. Because of that, sales due to additional expenses incurred how much amma? Due to the additional expenses, because of incurring this 10,000, how much excess sales we are having? 4 lakhs. Into apply the gross profit. How much of a gross profit in our example? 10%. What is the amount you are getting? 40,000. Whichever is lower, whichever is higher? Whichever is lower. That means up to the 40,000 of additional expenses we can give the compensation. If the additional expense is 50,000, you will make the compensation. No, you will make only the 40,000, because up to the how much you are saying. How much you are saving amma? We are saving only the 40,000 of profit. We are not saving the 50,000 of profit. For that reason, how much we will give ma? 10,000 only. So whichever is lower. And there is a third step. What is the third step, mama? Third step is called as, now we are going to compare with the additional expenses with the net profit plus insured standing charges. Why we are going to compare with this one? Means, sir, normally we will take the policy on total turnover, on total thing. What is the total thing, amma? As per your concept, you need to take the policy on salary, rent, electricity and net profit. You have to, they have to compensate all this ma, because if they are not compensated means who will suffer the loss? Our employee, our owner will suffer the loss or not? So actually you need to take all this ma. You need to take the policy for all the things. So what is the meaning of all the things here? Net profit plus, these are all called as what ma? Uninsured standing charges. These are called as what ma? Insured standing. So actually you need to take the policy for all these items. Okay now. So, but what is the amount of policy you have taken? What the insurer will give the policy amma? They will give only the net profit plus salary. Okay now. That means whatever the additional expenses you have incurred for all this. You incurred for all this. All this means what ma? Additional expenses is equal to net profit plus insured plus uninsured. But how much amount we need to find out? You need to find out the amount for only salary and net profit. What is the meaning of salary and net profit? Standing charges and net profit. That means what ma? So additional expenses is equal to how much? Is equal to net profit plus insured plus uninsured. So then what is the amount for net profit plus uninsured? Oh, sorry guys. What is the amount for net profit plus insured? We can do cross multiplier. What we will get ma? So additional expenses into net profit plus insured divided by net profit plus insured plus uninsured. This is the logic behind that third point. Are you getting the point? This amount is equal to the total thing. But we will give the insurance policy. We have taken the insurance policy on only what? On the insured and net profit. So this is the logic behind this. What is the formula ma? So the formula is additional expenses into net profit plus insured standing charges divided by net profit plus insured plus uninsured. So this thing of net profit plus insured standing charges is also called as gross profit on AAT. Is also called as what ma? Gross profit on AAT. But ultimately we are going to compare with which thing amma? Gross profit on AAT only. We need to compare with the which thing amma? Gross profit on AAT. What is the meaning of AAT? Adjusted annual turnover. So what is the meaning of annual turnover, sir? We can see. So next we need to see the gross claim. How we will get the gross claim means, so gross profit on short sales, nothing but step number 4 plus step number 5. They need to compensate the additional expenses also ma. They need to compensate the additional expenses. They should not compensate. They need to compensate the additional expenses also minus savings in insured standing charges. What is the meaning of minus savings in insured standing charges, sir? So what is the meaning of here insured standing charges? What we have taken example, salary is the insured standing charges. Okay now. So imagine because of losses, one of the employees say suddenly the fire accident happened in the Shikara. So what I have told to the Bhaskar sir means, sir, no need to pay the salary, sir, you are only suffering. So that means the salary is saving to the Bhaskar sir, not saving amma, saving. That saving component will be compensated by the insurance company. Yeah. So imagine you are in the footsteps of the insurer. You will compensate that savings, sir, you are not going to compensate amma. You are not going to compensate. For that reason, what we need to do? We need to reduce the savings in insured standing charges. That means what we are going to get ma? Gross claim. Are you getting the point? So next one, we need to calculate the gross profit. So here we have missed out one thing. So gross profit on adjusted annual turnover. So what is the meaning? First we need to understand the meaning of annual turnover. So annual turnover means turnover of, just a second guys. So turnover of 12 months immediately preceding to the date of loss of damage. So from the date of loss of damage to the preceding immediate 12 months. So on this only, sir, normally we are going to take the policy on sales. Policy on what ma? Total sales. So for that reason, what is the we need to consider ma? Sale turnover plus increase or decrease in the trend. What we will get ma? Adjusted annual turnover. On this, what we need to take ma? Gross profit on AAT. So we need to compare the policy value on gross profit on AAT. If the policy value is more, it is called as what ma? Over insurance. Then the claim amount is equal to the gross claim. What is the meaning of gross claim amma? Gross profit on short sales plus additional admissible expenses minus savings in insured standing charges. So if the policy value is greater than this thing means, sorry, less than gross profit on AAT means it is called as what ma? Under insurance. So we are going to take the policy on. So here the policy value is equal to how much amma? Policy value is equal to the gross profit on AAT. For That means what is the amount we are going to get from the gross claim? How will get my cross multiply? Policy value into gross claim divided by gross profit on AAT. This is called as average class. Are you getting the point? So once again, what are the steps you need to remember? First, for which period we are going to compensate? They will compensate for the indemnity period. Then after, we need to have the gross profit, because they are going to compensate the profit. We need to calculate the gross profit. For that reason, we want the gross profit percentage. Here there is a different calculation. What is the different calculation? Gross profit we should not apply. What is the normal gross profit percentage? Gross profit divided by sales into 100 normally. But here what net profit plus institute standing charge divided by previous year turnover. And next we need to apply the we need to find out the short sales. How we'll get the short sales, amma? So we have to take the standard turnover. We have to fix the standard turnover. What is the meaning of standard turnover, amma? Corresponding previous period is called previous period. Corresponding to the indemnity period is called as what, ma? It is a standard turnover. Under standard turnover, we need to make that trend. Then what we'll get, ma? After standard turnover, reduce the actual turnover during the previous period. Then we'll get what, ma? Short sales. For that short sale, we need to apply the gross profit percentage. Next, admissible, additional admissible expenses. What are the steps, ma? Lower of the following above, whichever is lower, whichever is higher, amma. Whichever is lower. Whichever is lower means what is the first step? Actual additional admissible expenses. Next, we should compare with the what, ma? Savings, sales, total. How much is turnover increases into gross profit. So sometimes they will not give the increases in turnover. Then actual turnover during the indemnity period is equal to the what, ma? Increase in turnover. If they are not given the increase in turnover, means actual turnover during the indemnity period is called as what, ma? Increase in turnover. Increase in turnover into percentage. Next one what, ma? Additional admissible expenses into net profit plus institute standing charges divided by net profit plus institute standing charges plus uninsured standing charges. I have clearly explained the logic, whichever is higher. And next the gross claim. Next what, ma? Gross profit on AAT. We have to compare with what, ma? Policy value on gross profit on AAT. If the gross profit on policy value is higher than the AAT is called as what, ma? Over insurance. Then the claim amount is equal to what, ma? Gross claim. And the next one what, ma? If the policy value is less than the gross profit on AAT, it is called as under insurance. Then we have to apply the average class. What is the average class, ma? Policy value into gross claim divided by gross profit on AAT. Some of the people may call it as what, ma? Nothing but this claim amount is nothing but what, ma? Net claim. So this is as per our institute. We have to follow this thing. So if you understand the logic, easily we can remember. Okay, na? Even I will remember like a logic only. So now we can solve the questions one by one. Here we are having the totally 3 questions. I will solve only the 2 questions because one question is simple. Okay, na guys. So which is directly they have given, ma? So 9th question you have to do because directly they have given the terms. So standard turnover, actual turnover, like that. If you see here the standard turnover like that. So 9th question you have to do. I will explain the 8th question. Okay guys, ready? On account of fire on June 15, 2021 in business house of the company, the working remained disturbed up to the period of December 15, 2021. What is the date of fire accident, amma? June 15. So June 15 to July 15, July, August, September, October, November, December. 6 months is the disturbed. As per concept, dislocation period we may call it as. So as a result of which no possible to affect the any sales. The company had taken out the insurance policy with an average class against the contractual losses. How much, amma? 1,40,000 for a period of how many years? How many months? 7 months. Sir, as per the agreement 7 months, but as per the dislocation period how much, amma? 6 months. Whichever is higher, whichever is lower, whichever is lower has been agreed upon the indemnity period and as increase in the 25% of the market of the current year sales as compared to the last year. So there is an increase in turnover. We have to adjust all the increase in turnover. The company incurred additional expenses. How much, amma? 12,000 to make the sales possible to be made. Save how much, amma? 2,000. Sir, savings of rupees 2,000 in the insured standing charges. What is the meaning of this 2,000? Savings in insured standing charges. Here they have not given the excess turnover. So excess turnover not given means indemnity period turnover will be the excess turnover. Are you getting the point? Next, ascertain the claim under the conceptual loss policy, keep the following additional information in the view. Actual sales from 15/6/2021 to 15/12/2021. How much amma? 70,000. This is called as actual sale during the indemnity period. Sales from 15/6/2020 to 15/12/2021. This is the corresponding period to the indemnity period. This is called as standard turnover. So next one, net profit for the financial year. How much amma? 80,000. Previous year turnover. Insured standing charges for the last financial year. How much amma? 70,000. Insured they have given. Total standing charges for the last financial year. How much? 12,000. What is the uninsured standing charges? 1,20,000 minus 70,000 is called as the uninsured standing charges. How much amma? 50,000. Turnover for the last financial year. How much? 6 lakhs. So this turnover we need to consider while calculating the gross profit. So next one, turnover from 1/6/2020 to 15/6/2021. This is called as annual turnover. This is called as what ma? Annual turnover. So we know the annual turnover, we know the actual turnover, we know the standard turnover. So why we are waiting? We need to start the steps. Okay na guys, shall we start? So before that we need to write the periods in order to understand which period is called as standard and which period is called as what ma? Annual, and which period is called as indemnity period. So question number, what is the question number guys? 8. Slowly we can do ma. Nothing worry. Okay na? First one, can you say the indemnity period? So what is the actual loss happened? 15/6, June means 6 amma, 15/6/2021. So what is the up to the next date? 15th December 2021. So up to here how many months amma? Here to here how months? 6 months. But as per the agreement, how many months they have given? 7 months, whichever is lower. So next, after the indemnity period, we have to see the standard turnover. So what is the meaning of standard turnover amma? Standard turnover means corresponding to indemnity period. So what is the meaning of corresponding amma? 15/6/2020 to 15/12/2020. Yes or no ma? So this is called as standard turnover. What is the standard turnover they have given in the question? 2,40,000. Okay, next one, what is the annual turnover? What is the meaning of annual turnover amma? 12 months immediately preceding to the date of fire. What is the actual date of fire happened? 15/6/2021. It is the date of fire, but up to 14. But up to what ma? 14/6/2021. So here to preceding 12 months means 14/6/2020. 14/6/2020. This period of turnover is equal to how much amma? This period turnover is equal to how much? 5,60,000. So here we should take the 16 amma. So why? Because I am saying next question we need to identify the dates and we need to identify the turnover. This question is very simple. Okay na? What is the amount amma? Amount? 5,60,000. For that concept I am giving the clear picture here itself. Okay na? Now we can follow the steps and we can do the things and we can find out the claim. Okay na? What is the step number 1 ma? Calculation of indemnity period. What is the formula for calculation of indemnity period ma? Period given in policy is equal to how many months amma? 7 months or period given in question is equal to how many months, amma? 6 months. Whichever is higher, whichever is lower, amma? Whichever is lower. So from 6 months, where to where, ma? 15, 6, 20, 21 to 15th December 2021. Guys, fine. So what is the step number 2? Calculation of gross profit percentage. Calculation of gross profit percentage. So what is the formula for the calculation of gross profit percentage, ma? So here normally gross profit divided by sales into 100. Now what, ma? Net profit of which year? Previous year. Okay, na? Plus ensued standing charges divided by previous year turnover into 100. So can you say the gross profit, amma, from the question of financial year how much? 80,000. And ensued standing charges how much, amma? 70,000. Previous year turnover how much, amma? 6 lakhs. 80,000 plus 70,000 divided by how much, amma? Previous year turnover 6 lakhs into 100. That is equal to how much, amma? 25%. And there is excess in sales, amma. Related to the current year sales, what is the amount of excess? 25. What is the amount of excess, amma? 25. So the actual gross profit will be the 25 only, but while comparing the standard turnover, all the things, how much we need to apply? 25. Oh, how did it come into the picture? Yeah. Okay, no problem. Just a second, guys. While sending, I will keep the order, amma. No problem. Okay, what is the step number 3, guys? Step number 3, calculation of short sales. Sir, remember the concept, sir. Calculation of short means wearing the short, not calculation of short sales. So we have to compare with something, then only we can say it is a short. We have to compare which thing, amma? We'll compare with you and your brother 10th class. No, we have to the base. Okay, na? Seasonal means summer season means you have to compare with the summer season. Then only. How generally in the world people they will say when compared to the previous year summer season, in this summer season our sun is having the more heat like that. So they will compare the summer season with summer season, not the summer season with winter season. For that reason we have to take the corresponding to the indemnity period. So what is the standard turnover, amma? So we have written above the question 2,40,000. So but here we are having the trend. So what is the amount of trend we are having? Add back 25% increase in sales. How much? 2,40,000 into 25%. 60, 60,000. Then what is the total sales, amma? 3 lakhs. Can you say the sales during the indemnity period? Yes, we can say the sales during the indemnity period. How much, amma? Additional expenses 12,000. Oh, where is it? Here they have given in the question, sales from 15/6/2021 to 15/12/2021. How much? 70,000. So reduce minus sales during indemnity. How much? 70,000. So how much we are going to get? 2,30,000. Okay, now no need of shortcuts like that. So what is the meaning of this one? Short sales. So next step number 4. Step number 4, gross profit on short sales. So short sales into percentage. Into which percentage? Gross profit percentage. What is the amount of short sales? 2,30,000 into 25%. 57,500. Okay, na guys. So next, what is the step number 4, Additional 5, na? Step number 5. Additional admissible. So what is the spelling? ADDMI. Addition ADMISL. No problem, sometimes it happens. Additional admissible expenses. What is the additional admissible expenses? First one we have to see lower of the following, higher of the following. Lower of the following. So first one, what is the first point, Amma? So just a second, guys. I need to cut this one. So lower of the following, what is the first step, Amma? Actual additional expenses. Actual additional expenses. What is the amount of actual additional expenses given in the question, Amma? 12,000. And next, what is the next point, Amma? Additional sales due to additional expenses incur. Nothing but gross profit on additional sales due to additional expenses incurred. Okay, Namma. So there is no special additional expenses, but even though we are going to treat it as what, this indemnity period sales only the additional sales. This is a note point we need to write. 70,000 into 25%. That is equal to how much, Amma? 17,500. What is the third formula, Amma? Actual additional expenses into what, ma? We have taken a policy for only net profit plus insured. Here we can write what, ma? Net profit plus total. Net profit plus total. Okay, now what is the actual additional expenses, Amma? 12,000 into, what is the net profit amma? 80 plus 70 divided by 80 plus 120. 80,000 plus 70,000 divided by 80,000 plus 120,000. So nothing but 1,20,000. So because this is the total expenses. Okay, now either if you want you can write like this also, net profit plus insured plus uninsured. So total how much amma? 9,000. Whichever is lower means 12,000, 17,500, 9,000 amma. 9,000 is the additional admissible expenses. So how many steps you have completed? 5. What is the sixth step amma? Is nothing but calculation of gross claim. Step calculation of gross claim. So what is the formula for the calculation of gross claim amma? Gross profit on short sales or short sales? Gross profit of short sales, because they will compensate only profit amma. They will not compensate the turnover. How much is the gross profit on short sales? Step number 3. How much amma? 57,500 plus additional expenses. They will compensate. Yes, they will compensate. Additional expenses. How much amma? 9,000. Whichever is lower, whichever is higher, whichever is lower. Minus savings in insured standing charges. Minus savings in insured standing charges. How much amma? So they have given in the question 2,000 is the savings in insured standing charges. So we need to reduce. How much amma? 64,500 is the gross claim. And next, what is the step number 7? Calculation of gross profit on AAT. Calculation of gross profit on AAT. What is the meaning of AAT ma? Adjusted annual turnover. So first we need to find out the adjusted annual turnover. Adjusted annual turnover means first take the annual turnover. Can you say the annual turnover amma? So they are given in the question. So annual turnover is equal to how much amma? 5,60,000. So we need to add back the turnover increase. How much amma? Plus 25% increase in turnover. That is equal to how much amma? 1,40,000. Can you see the calculation? 5,60,000 into 25%. So what is the total amount? 7 lakhs is the AAT, not the gross profit on AAT. So now, what is the gross profit on AAT amma? 7 lakhs into 25%. 1,75,000. We need to compare with the policy value and gross profit on AAT because we will take the policy on turnover basis. Okay na? So step number 8. Calculation of net claim or gross claim amma? Net claim. So we have to compare with the two things. Can you say the policy value amma? Policy value we have to take in from, so again it is blur. Wait a second. Sorry for interruption. Thank you guys. A lot of students are participating. So how is the section? Genuinely answer amma. Today our Udbhav is not there. That's why only the environment is very peaceful. So next one, can you say the policy value, ma? Policy value 1,40,000. They're not come, ma. Just a second. Sometimes all the things going wrong means some of the things will be there. Life, one life, one chance. So now also not getting a. No, it is fine. Yes, coming. Yes. What is the policy amount, amma? 1,40,000. So go there and write the policy amount. 1,40,000. And next we need to compare with the gross profit on AAT. How much, amma? 1,75,000. This is the concept called as under insurance or over insurance. When comparing to these two things, policy value is less than gross profit on AAT. So this is called as under insurance. So what is the average class? You have to apply the average class. What is the formula for the average class, ma? Policy value into which one will get? Gross claim divided by gross profit on AAT. Can you say the policy value, ma? 1,40,000 into, can you say the gross claim? 64,500 divided by, what is the gross profit on AAT? 1,07,500. 64,500. 64,500 and how much we are getting? 51,600. Is everything fine, ma? Sir, getting loss of stock means it is easy sum. There will be no adjustments. If you know the steps, easily we can write the question. And now, my favorite question, especially when coming to this chapter. Okay, na? Because we need to, how much sharp is your mind? I need to check now. Okay, na guys? Let us start. You need to participate for this. So the final question coming to the picture regarding to the insurance claims. So definitely if you utilize this revision section, definitely you are going to get 7 out of 7 marks from the insurance claims. So not only the 7, you can answer the what, ma? MCQ also. Okay, na guys? So 10th question, the most important question. A fire occurred on March 15, 2021 in the premises of Omega Limited. In the which premises, amma? Omega. A loss of profit policy. Which policy, amma? Profit or stock? Profit. Was taken by the Omega Limited for rupees how much? 80,000. The indemnity period was how many months, ma? 3 months. The net profit for the ending how much? 31st March 2022 is 56,000 and standing charges. All are insured mean. All are insured. Amounts to how much, amma? 49,600. Determine the insurance claims from the following details available from the quarterly sales. Sir, they have given this information. So 2018 sales, 2019, 2020, 2021 sales. Currently we are in a which year, amma? 2021. Currently we are in which year? 2021. How many months the indemnity period? Indemnity months they have given up to the 3 months. So directly they have given the indemnity period in the question itself. We no need to take the first step. But first of all, we try to understand and we try to find out the period for the standard turnover. We try to find out the period for the annual turnover and the indemnity period also. We need to find out the, by way of utilizing this turnover details, we need to find out the turnover of indemnity period, turnover of annual turnover, turnover of the standard turnover. Before that, we need to identify the period for the standard turnover, annual turnover and the indemnity period. So question number 10, final question. So first of all, so indemnity period. What is the starting point of indemnity period, amma? From the date of file, March 15, 2021. Yes or no, ma? So this is the starting point. 15 March 2021. From here to 3 months means. From here to how many months, amma? 3 months. Here to 3 months means where to where? April, May, June. That means 15th June. 15th June means 6 or 7, amma? 6 2021. Yes or no, ma? Okay, next. Now we need to identify the standard turnover. What is the meaning of standard turnover? Corresponding to the indemnity period. So corresponding to the indemnity means previous after, amma? Previous. So 15/3 2020 or 2021? 2020. So 15/6 2020. Guys, fine. So next, what we need to identify, amma? Annual turnover. So what is the meaning of annual turnover? 1 year preceding to the, immediately preceding to the date of file, 12 months. So what is the ending date? 14/3 2020 is the ending, amma. Here to 12 months means, here to 12 months means 16th March 20, sorry guys, here 21. Yes or no, ma? This is the end date. So that means preceding to that date is the end date. So 16 March 2020. Are you getting the point? So here to here, these are the timelines regarding to the standard turnover, indemnity period and annual turnover. So corresponding to this, we need to find out what, ma? We need to find out the turnover. If you know the turnover, easily we can do the question. Okay, na guys? So now identify. Here the information is there. Try and identify and say to me, what is the indemnity period turnover? For you only, guys. What is the indemnity period turnover? Tomorrow class timing same. Same. Tomorrow the branch, the important concept. Say the turnover. How to find out? Here is the data they have given. We need to find out the turnover. So what is the indemnity period? First of all, 15th March 2021 to 15/6 2021. So how to find out? Okay guys, no problem. There is an interruption, that's all. Udbo coming to the picture. How much amount, Udbo? 28,000. You will see. Can you say the explanation? Guys, come on, participate. How? Online or offline? Let us see. If I say it will be completed soon, try and find out. So turnover related to which period? Related to 15 March 2021 to 15/6/2021. So shall I say? Okay, Amma. See guys. Sir, 2021 year is this one. So they are given the 2 quarters. April to June is 1 quarter and July to September is 1 quarter. For us, the most of the period is located from where to where, ma? From 15th March 2021 to 15/6/2021. That means I will take this turnover, ma. 1st April to June 30th. What is the turnover, amma? 40,000. What is the turnover? 40,000. Okay. Okay, sir. Now we are trying to find out the indemnity period turnover, amma. Indemnity period turnover. So first we have consider where to where, ma? Can you say the year? 1st April 2021 to 30th June 2021. That is equal to how much? 40,000. I have taken this one. Okay. What is the actual period, amma? 15 to here 15. That means here we have considered from 1st April. But 15 days are missing. We need to consider the 15 days turnover. We should not consider. We should consider. So can you say the 15 March 2021 to 30th March 2021 turnover? They have given or they have not given? Yes, they have given. But what is the amount, amma? Nothing but 15 means we can say 16 here. Okay, na? So 16 March 2021 to 31st March 2021, how much? Nil. So there the amount they have given what, ma? Nil. So in the March 31 days, okay. So the amount is nil. Okay, na? But here extra 15 days are there, ma. In this period, we are having what, ma? Extra 15 days. We need to reduce that extra 15 days turnover. So what is the extra 15 days we are having? So 16 June 2021 to 30th June 2021. These are the extra. For that reason, we are going to reduce. Can you say the turnover of this one? The turnover of this one is this only, yeah? How much, amma? 6,000. Add up, minus, minus. So minus 6,000, that is equal to how much, amma? 34,000 is the indemnity turnover. Okay, na guys? So like that we need to consider. So if I say 34,000, Vignesh. Super. So next we are going to try standard turnover. We are going to find out standard turnover. Can you say the period same sequence? Same sequence but previous year. Same sequence. I will write the same dates now first of all. What is the first we have taken? 16th March 2021 to 31st March 2020. But this date where what we need to take? Previous year or current year? Previous year. So 16th March 2020 to 31st March 2020. Okay, na? And here 1st April 2020 to 30th June 2020. The same corresponding years I am taking, amma. Are you getting the point? So here this corresponding, here to here this corresponding. Okay na guys? So like that. So what is the corresponding period for this one? What is the corresponding period for that one, amma? Can you say? So how much? 16/6 2020 to 30th 6 2020. This thing we need to reduce. Can you say the turnover of all the things? So first, this is the turnover 1 lakh preceding, and next this is the turnover 28. We need to add back 1 lakh and 28, and we need to reduce how much, amma? 24,000. Are you getting the point? So this is the 1 lakh, and here the turnover how much? 28,000. We need to add, and we need to reduce how much, amma? 24,000. What is the ultimate amount? 1,04,000 is the standard turnover. In the preceding question, we have find out. They have given, we have recorded directly. Now we are going to find out. Are you getting the point? Next, which turnover we need to find out, ma? Annual turnover. So annual turnover. First I am going to write the time period. So what is the annual turnover time period, amma? I will copy this one. 16 March 2020 to 14th March 2021. So first time means it will take time. If it is a number of repeating means it will be easy. So sir, here if we see here, we are in the 2021. We are in the which year, amma? 2021. So what is the previous year? 2020. In the previous year, which date onwards they are going to start? March. So March means we can take from here. We can take from here. So this turnover belongs to annual turnover. This turnover, and this is also turnover. And this 40,000 we should consider, we should not consider. We should not consider, amma. Up to which date? Up to 15 only. For that reason, I am going to consider what are the turnovers. 1 lakh, 1,20,000, 1,66,000, 1,30,000. And here also we need to add a certain turnover, because we are in the April, but it should start from the 16th March. So that means we need to add this turnover 16th March 2020. Are you getting the point? And we need to reduce which turnover, amma? We need to reduce 16/2022 30th 6 20 sorry guys, 16/2021 to 30th 6 2021. This turnover we need to reduce. So what are the turnovers we need to add? So this one, and this we need to add, and this one also we need to add, and this one we need to reduce. So can I write directly, or can I write the right timelines? Directly, yeah? Okay. What is the total, amma? 1 lakh plus 1,20,000. 1 lakh plus 1,20,000 plus 1,66,000 plus 1,30,000. And again plus what, ma? 28 minus 6,000. What is the total? 1 lakh, 5 lakh, 5,38,000. Guys, fine, Vignesh, okay na, ma? Vignesh, Shekha Madhua. So next, easily we can do the steps. So come on, amma, fastly. So what are the things they have given, amma? 80,000 is called as what, ma? Policy value. And indemnity period 3 months, and net of the profit year ends how much, amma? 56. Net profit they have given. Standard charges total or standard how much? 49,600. So And next, they have not given the additional expenses. So that means the total steps we can ignore. So that means up to gross profit on short sales we can consider. Is there any savings in standing charges? There is no savings in standing charges also. That means easily how many steps we need to do? 4 steps. How many steps? 4. In that first step also not necessary. Why they have given the indemnity period is equal to how many months? 3 months. First step also gone. Directly second step, third step and fourth step. In that fourth step, whatever the claim amount is gone, so that will be the claim. They have given the insurance policy. We have to find out the gross profit on AAT. We will compare both the things and then easy only. So let us start. So here the step number 1 will be the differ. Okay, Nama. Directly, what is the step number 1 here? So normally indemnity period will be there, but indemnity period given or not given? Given. So calculation of gross profit percentage. Okay, so what is the formula, Amma? What is the formula? Gross profit percentage is equal to net profit plus insured standing charges divided by what, ma? Previous year turnover. So can you say the net profit, amma? They are given in the question. Yes. How much, amma? 56,000 is the standing charges. What is the net profit, amma? Where it is? So these are the turnovers. So 56,000 is the net profit and 49,600 is the standing charges. 56,000 plus 49,600 divided by what is the previous year turnover? Previous year turnover means which turnover we need to consider? 1,44,000 plus 1,00,000 plus 1,20,000 plus 1,66,000. What is the total, amma? Yes or no? What is the current year? 21. What is the previous year, amma? 20. Yes or no? 5,28,000. So previous year means 2020. So 2020 turnover. How much we are getting, amma? Into 100. 20, yeah? 20%. So next step number 2. What is the step number 2, amma? Calculation of short sales. So what is the calculation of total short sales, amma? What is the first one? Standard turnover. How much is the standard turnover, amma? We have to find out, na? So standard turnover is equal to 1,04,000. Okay, na? What happened? Nothing, huh? So is there any increase in turnover they have given, huh? Is there any increase in turnover they have given or not, ma? They have not given the increase in turnover. So next 1,28,000. Huh? How much is the standard turnover, amma? Here they have given that 28,000. Why? Huh? They have given wrong, huh? Okay, 1,04,000. Okay, 1,04,000. Okay. Okay. But here we need to adjust the trend, amma. So what is the trend we need to adjust, sir? So if you see what is the total turnover for the 2018? What is the total turnover for the 2018? Four lakh 36,000. What is the turnover for the 2019? 1 lakh 30 plus 90 plus 1 lakh 10,000 plus 1 lakh 50,000. What is the turnover, amma? Participate. 4 lakh 80,000. We already calculated the 2020 turnover. How much? 5 lakh 28,000. 5 lakh 28,000. Sir, what is the current year turnover? 2021. So okay, is enough up to. So can you say the increase in profit here? Increase in percentage of sales? How we can say, amma? 4 lakh 36,000 divided by 4 lakh 36,000. Sorry, we can say like this, amma, increase in turnover. Just a second, I will explain. 4 lakh 80,000 minus 4 lakh 36,000 divided by 4 lakh 80,000. 9.16. 9 point, nothing but around 10%. From here to here, how much, amma? How we can find out? 5 lakh 28,000 minus 4 lakh 80,000 divided by 9.9. Around what, ma? 10%. So okay na? So we have to write the working note. Increase in turnover. Working note 1. Calculation of increases in turnover percentage. How we can find out, ma? Can you say the turnovers respectively? 2018 4 lakh 36,000. 4 lakh 36,000. 2019 how much, amma? 4 lakh 80,000. Next 2020 how much, amma? 5 lakh 28,000. Next, increase in turnover percentage for 2019. Sir, we know the formula. Difference in turnover divided by earliest turnover, amma. Earliest means how means? I will say 4 lakh 80,000 minus 4 lakh 36,000. Sir, we should take the 4 lakh 36,000. We should take what, ma? 4 lakh 36,000. How much we are getting? Exact 10%. So 10%. Now increase in turnover percentage for 2020. How will get, ma? 2020 turnover is how much? 4 lakh 80,000 minus 5 lakh 28. 5 lakh 28,000 minus 4 lakh 80,000 divided by 4 lakh 80,000 into 100. That is equal to how much, amma? How much percentage you are getting? You are not. So here 10% in the denominator we have to take the lowest amount. We should not take the highest amount. We have to take what, ma? Lowest amount only. Like that we need to calculate the difference percentage. Okay na? For example, if A is getting previous, you can say unit 1. Unit 1, 100 marks, amma. In the unit 2, he is getting 200 marks. How we will say, ma? How much percentage he has increased? 100%. By your seeing amounts, we can say easily. You have to find out the difference. How will you find out the difference? Means 200 minus 100 divided by 100. That is equal to what, ma? 100 divided by 100. Divided by 200 means how much? Sorry guys, sorry. 100 into 100%. How much, ma? That is equal to 100%. So what we need to take, ma? We need to take the lowest value or we need to take the highest value? We need to take the highest value. Did you get the point? Or otherwise I need to explain. Okay, na? Lowest value only. So approximately how much we are increasing the turnover? 10%. So add back trend at the rate of 10% increase in turnover. How much, amma? 1,04,000 plus 10%. 10,400. Can you see the total amount? One lakh 14,400. And next minus actual sales. What is the actual sales in the indemnity period? We have find out now. So how much? 34,000. How much we are going to get? 18,480. 80,400 is the short sales. Now, what is the step number 3, amma? Gross profit on short sales. How we can find out the gross profit on short sales, amma? Short sales into percentage. How much? 80,400 into what is the gross profit percentage, amma? 25, 20%. How much? 16, 60, 16,080 rupees. Okay, na? Correct? Next, no need to do the 4th step. Okay, na? And no need to do the 5th step also, because if there is no additional expenses, there is no savings otherwise. So directly the step number 4 is gross profit on AAT. Calculation of gross profit on AAT. First we need to find out the AAT. What is the meaning of AAT, amma? Adjusted annual turnover. In the examination you have to write the adjusted annual turnover full form. Okay, now what is the annual turnover we have find out? 5,38,000. We need to add back the trend. How much, amma? 10% is how much? 53,800. How much we are going to get? 5,91,800. This is the adjusted annual turnover. On this we need to calculate what, ma? Gross profit. So 5,91,800 into 20%. How much, ma? 1,80,000. 360. This is the gross profit on AAT. The final step. What is the final step, ma? Step number 5. Calculation of net claim. Sir, we have not calculated the gross claim. The gross claim will be the gross profit on GAT, short sales. Gross claim will be the what, ma? Gross profit on short sale, because we are having what? We are not having any additional expenses and savings in insured standing charges. Okay, now So policy value is how much? Given in the question, yes, how much amma? 80,000. Policy value is 80,000. So can you say the GP on AAT? Nothing but adjusted annual turnover. How much we have got ma? 1,18,360. Under insurance or over insurance amma? Under insurance. So policy value is less than GP on AAT. Average class. What is the formula for the average class ma? Policy value into gross claim divided by GP on AAT. What is the policy value amma? 80,000 into gross claim is nothing but gross profit on short sales. How much amma? 16,080 divided by what is the gross profit on AAT? 1,18,360. What is the amount? Vemendra, Supramma. 10,868. Okay, na? 868. Sir, here so many students, they will forget to take the trend. So this is the most important. And what is the second most important? I understand the how to calculate the increase in turnover. We have to take the what ma? Preceding one na, succeeding one na, in the denominator, preceding one. So I think you understand this example clearly. So if you understand this example clearly, you can understand this nothing but increase in turnover concept. So okay na guys. So this is the overall complete picture about the insurance claims. Definitely you are going to get 7 plus 9, 9 out of 9 marks if you completely listen this revision lecture. Sir, this is not a revision lecture. Like a regular class I have discussed. Each and every point I have written. Okay, now only one question I have given the homework. That question also will get easily by way of seeing the previous model. That's all. So I am so happy. I am so happy to see you. So and all the students will clear. We are going to get the exemptions in this financial accounting. So those who are up here in these classes. And again I am saying what ma, these notes will be available in the shikratutorials.com. So go to the shikratutorials.in and there are free resources. I will show you. Wait ma. And you have to open the Chrome or whatever it is. So go to the shikratutorials.in. In this Shikara tutorials, we are having the free resources. In these free resources, if you see, we are having the materials. So these are the two materials regarding to the financial accounting. And if you want, you have the handwritten notes. You are going to apply here. So NPO completed the previous section. Now you have completed what ma? We have completed the insurance claims. It will be available soon. And next, then after, if you want the revision lecture classes, you can get through here. Total 4 classes we have completed. So 4th class will be continue here. If I winding up, this class also will be available to you. So this is the total and how we are going to sacrifice the. So many students are asking for the remaining subjects. So remaining subjects also will get soon amma. The timetable will be released soon. First I am having the time to available to deal the classes. For that reason I came the first. So thank you, have a nice day. Thank you very much for your love and support. Thank you, bye bye. Take care amma. Subharatri.